Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. If you have questions or topics that you wish to discuss, please chat those over, as we love to go over questions and topics. So with that in mind, let's get started. We're excited to discuss today how to double your retirement with Fidelity Backdoor Roth IRA and Mega Backdoor Solo 401k in 2025. In other words, how to contribute to both a Roth IRA and a Solo 401k in 2025. Again, if you have questions or topics that you wish to discuss, please chat those over. The presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Let's start out with the basics. So in terms of what a solo 401k is, a solo 401k is a retirement plan specifically for self-employed individuals. So in order to be eligible to set up a solo 401k, you have to be reporting earned self-employment income in your taxes. For example, on Schedule C, if your business is a sole proprietorship, or maybe an LLC taxed as a sole proprietorship, or W-2 wages. For example, if your business is taxed as an S Corp or a C Corp, or if you have income reported on line 14 of your K-1 in the event of a business that is taxed as a partnership. So that would be the first prong of being eligible to set up a solo 401k. The other requirement is that there are no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. That's what would enable someone to set up a solo 401k. So if you are eligible to set up a solo 401k, the question becomes then, can you make a backdoor Roth IRA contribution as well as a mega backdoor Roth solo 401k contribution? And the answer is yes. But let's dig into more about why the answer is yes. And so now we want to turn to understanding and quickly what a backdoor Roth IRA is. So when one refers to a backdoor Roth IRA, they're really referring to the fact that there are income limits above which one is not eligible to make Roth IRA contributions. In other words, if someone makes too much money, they are not eligible to make a Roth IRA contribution. But there is a workaround referred to as a backdoor Roth IRA that you would have to work with your tax advisor to complete. But in short, even if you're not eligible to make a Roth IRA contribution because you make too much money, you may be able to make what's referred to as a backdoor Roth IRA contribution. So when you make too much money, you can't make a Roth IRA contribution, but you can make what's referred to as an after-tax contribution or as a non-deductible contribution to a Roth IRA, and then transfer those non-deductible funds, those after-tax funds in your IRA over to a Roth IRA. Hence the reference to a backdoor Roth IRA, because it's really a two-step process. You first make an after-tax contribution or a non-deductible contribution to an IRA before the funds are moved over to a Roth IRA. Now, there are other considerations that you would have to work through with your tax advisor. For example, the pro rata rules. So when you move those non-deductible funds over to the Roth IRA, if there are other types of funds in your IRA, for example, pre-tax funds, and even if they're in a different IRA, because when one looks at your IRA and determining whether there are other types of funds, you really have to look across all the IRAs that you have. So if you have even pre-tax funds in a different IRA, when you move the money when you move the non-deductible funds over to the Roth IRA, you would do so on a pro rata basis. So what a lot of folks want to do is they don't want to have any other types of funds in their IRA or even in another IRA. In other words, they don't want to have pre-tax funds in any IRA that'll allow them to make a clean backdoor Roth IRA contribution so that all the funds that are moved over are non-deductible funds. So that's, in short, what a backdoor Roth IRA is. And there are contribution limits that apply. It's the same contribution limits that apply to any IRA contribution. For example, for 2025, $7,000 or $8,000 if you're age 50 or older. So now the question becomes, for those that are eligible to set up a solo 401k, can I make a backdoor Roth IRA and a mega backdoor Roth solo 401k contribution? And the question is yes, because those contributions that are made to your IRA, those non-deductible contributions that are made to your IRA as part of the backdoor Roth IRA process are not aggregated with the contributions that you want to make to the solo 401k. Now, it's important to note that you have to have income to justify both contributions. So if you're contributing 100% of your self-employment income as a mega backdoor Roth solo 401k contribution, you can't use that same income to justify your non-deductible IRA contribution as part of the backdoor Roth IRA. But the definition of income that can be used to justify that non-deductible IRA contribution is broader. So for example, one can only use earned self-employment income to justify contributions to a solo 401k, whereas one can use other types of income, such as W-2 wages from a day job, to justify an IRA contribution. So the definition of income that is needed to justify an IRA contribution is broader. You can't use, for example, W-2 income from a day job to justify a contribution to a solo 401k. So as long as you have the income to justify both contributions, you can make both contributions, and those contributions are not aggregated. Now, it's also noteworthy that there are no income limits that apply to mega backdoor Roth solo 401k contributions, right? Contrast that with the Roth IRA rules, right? Which is the whole reason that folks are making backdoor Roth IRA contributions, because they make too much money that they're not eligible to make a Roth IRA contribution. But there are no such income limits or similar income limits that would restrict someone's ability to make mega backdoor Roth solo 401k contributions. And then finally, here today, we want to focus on making contributions to accounts that are at Fidelity. So you can most certainly make backdoor Roth IRA contributions to accounts at Fidelity, right? You first deposit the non-deductible contributions to an IRA that are then moved over to a Roth IRA at Fidelity. And you most certainly can have your accounts for your solo 401k plan provided by us, which allow you to make those mega backdoor Roth solo 401k contributions also at Fidelity. So you can have both. So that's how, in short, you're able to double your retirement with both a Fidelity backdoor Roth IRA as well as a mega backdoor Roth solo 401k at Fidelity here in 2025. So now that we've got the overview, let's dig in deeper to understand how it would work. So now let's start to understand more about what a mega backdoor Roth solo 401k is. So mega backdoor Roth solo 401k is really a marketing term. And so really what it is you need to have a solo 401k plan that allows you to make mega backdoor Roth solo 401k contributions. And the benefits of making those mega backdoor Roth solo 401k contributions is that you're able to contribute a much higher amount. So for example, for 2025, one can contribute up to $70,000 to a solo 401k, or even more if they're age 50 or older. And just like a backdoor Roth IRA, with a mega backdoor Roth solo 401k, the tax benefits is the potential for tax-free growth. So the funds are going to go into the solo 401k. They're going to be contributed to the solo 401k on an after-tax basis. So there's no immediate tax benefit. Whereas if you make a pre-tax contribution, you're reducing your taxable income for the year for which you make the contribution. When you make a mega backdoor Roth solo 401k contribution, you're not reducing your taxable income now for the year for which you make the contribution, but going forward, the gains could potentially be tax-free. They would be tax-free If at the time that you take a distribution from that Roth Solo 401k, you do so as a qualified Roth distribution, meaning you've had the account for at least 5 years and you're at least 59 and a half years of age. So the process would be to first be eligible, right? We talked about how you have to be self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. That's what makes you eligible to set up a solo 401k generally. Then you need to find a solo 401k provider like us, like my solo 401k Financial, that offers a plan that allows for voluntary after-tax contributions and then in-service distributions. So it's going to be a two-step process when you make a mega backdoor Roth solo 401k contribution. Step one is you're making a voluntary after-tax contribution that needs to go into a separate voluntary after-tax account for the solo 401k. And then step two is moving those after-tax funds either to a Roth solo 401k or a Roth IRA. So you need to have a plan, meaning the plan documents that allows for both steps, which of course our plan does. You're going to want to work with a provider like us that has deep experience in guiding clients through the process, right? So we assist our customers with establishing the required sub-accounts, because you'll need separate accounts if there are different participants, like a husband and wife, both working in the same business, both participating in the solo 401k, as well as for different types of funds within the solo 401k. It could be pre-tax, Roth, and then of course, voluntary after tax. And then of course, you want to work with a provider that provides the ongoing compliance support. So even though that first step of making that voluntary after-tax contribution is not reportable on the business tax return or the personal tax return, that second step, when the funds are moved from the after-tax account to either the Roth solo 401k or to a Roth IRA, in either case, that second step of moving those funds over is reportable on a Form 1099-R. And we handle the 1099-R as an optional free service. In other words, no additional charge for our customers. Our customers just need to let us know by completing an online form on our website that they can do 24/7 to give us the information we need to prepare the 1099-R. So specifically, if the accounts are at Fidelity, the process to make those mega backdoor Roth solo 401k contributions would be step one, opening up an account at Fidelity. So this is going to be a brokerage account, what they call an investment only account at Fidelity, specifically for those voluntary after-tax funds. And of course, we're very hands-on in helping our customers open up the accounts that are needed, making the voluntary after-tax contribution. And again, we're very hands-on in helping our clients understand how much they can contribute based on their situation. Step two is then transferring the funds from the after-tax account either to a Roth solo 401k or a Roth IRA. It could be a Roth IRA at Fidelity. Then step three, completing that online form on our website to give us the information we need to prepare the 1099-R. You can easily find our forms that customers use to give us that information at mysolo401k.net/forms. There's no deadline to convert from the after-tax account to either the Roth solo 401k or Roth IRA. Now, of course, there is a deadline to make the contribution, the first step, but there's no deadline to transfer the money from the after-tax account to the applicable Roth account. Here's a great slide as it shows us visually how it might work. For example, if the funds are going out to a Roth IRA, the individual is going to have an after-tax account for their solo 401k, and then the funds are transferred out of the plan to the Roth IRA. And again, that second step is reportable. So before we go on with the deadline to make contributions, I'll just pause. Again, if you do have questions, please don't hesitate to chat over questions or topics. It doesn't necessarily have to be on this topic. We appreciate the chance to discuss solo 401k plans generally. If you're finding this to be helpful, if you please like this video, it'll help us get the word out, whether you like us on YouTube or LinkedIn or StreamYard or X, the different platforms we're on. We really appreciate that. Or share with those others in your network, for example, that might find it to be helpful. Of course, there's a growing number of self-employed individuals, so it helps us to get the word out and to self-employed individuals that might be trying to catch up on their retirement account balances. It could be very useful information, so we appreciate that. Thank you so much. So now let's turn to when is the deadline to make contributions. So there are different factors that impact when the deadline is to make contributions. One is, when was the plan established? Two is, how is your self-employed business taxed? So let's first talk about the category of solo 401k account holders who set up a plan on or before the end of last year, on or before December 31st, 2024. Whether they set up a plan with us or whether they set up a plan somewhere else and now they're looking to upgrade their plan to our plan. Maybe you set up a basic plan at Fidelity, which of course doesn't allow for Roth or mega backdoor Roth contributions. And now you want to upgrade to our plan so you can take advantage of those features. So if the plan was set up on or before the end of last year, before December 31st, 2024, you can make all types of contributions by the business tax return deadline, including any timely filed extension. So obviously with us being here in May, that means you would have to have filed an extension for your 2024 tax return. But if you established a plan, for example, you signed up with us before the end of last year, and you filed an extension for your self-employed business tax return, for example, your 1040 in the case of a business taxed as a sole proprietorship, your 1065 in the case of a business taxed as a partnership, your 1120S in the case of a self-employed business taxed as an S Corp, or an 1120 in the case of a self-employed business taxed as a C Corp, then in that case, you would have until your extended tax return deadline to make all types of contributions for 2024, whether employee, employer, or voluntary after tax. So that's going to be October 15th in the case of a business taxed as a C Corp, September 15th in the case of a business either taxed as an S Corp or a partnership, and then again October 15th in the case of a business that's taxed as a sole proprietor or an LLC taxed as a sole proprietor with that self-employment income reported on Schedule C of your 1040. So again, if you filed an extension and you set up the plan before the end of last year, you could make all types of contributions until your 2024 extended business tax return deadline. Now, if someone didn't set up a plan until here in 2025, but they filed an extension for their self-employed business tax return, they could still set up a plan here in 2025 and at least make employer and or voluntary after tax, in other words, mega backdoor Roth solo 401k contributions by that extended deadline. So for example, if your business is taxed as a sole proprietorship and you hadn't yet set up a plan for your self-employed business, you could set up a plan in 2025. And again, if you filed an extension for your 1040, you could set up a plan in 2025 and make 2024 employer or voluntary after-tax contributions, in other words, mega backdoor Roth contributions, by October 15th, in other words, the extended deadline. Likewise, if your business is taxed as a partnership and you filed an extension for your 1065, a timely extension, even if you didn't set up a plan before the end of last year, you could still set up a plan and make employer and or voluntary after-tax contributions by that extended deadline, September 15th. Likewise, if your business is taxed as an S Corp and you filed an extension for your 1120S, even if you didn't set up a plan before the end of last year, you could set up a plan now and make employer and or voluntary after-tax contributions. And likewise, if your business is taxed as a C Corp, but you filed an extension for your 2024 1120, you could set up a plan here in 2025 and make at least employer and or voluntary after-tax contributions for 2024 by that C Corp extended deadline of October 15th. Okay, wonderful. So we go live twice a day. If you subscribe to us, either on YouTube or LinkedIn or X, you'll get notifications of when we go live. We like to bring content every day, but we also love to answer questions or go over topics. So you can come and listen to our content, or you can come and ask a question. You'd be welcome to do both. We also have a community, mysolo401k.net/my community. It's a vibrant community with over 30,000 members. You can post questions in our forums. You can check out our library of videos and webinars. We also, of course, have our AI, the industry's first AI, which you're welcome to use at solo401k.ai. It's a great way to quickly find answers to questions and other resources. But with that, we thank you for your participation. And until next time, thank you so much.